Ira Epstein of Linn & Associates with your weekend edition of your metal market wrap-up. And this is for Saturday, the 21st of November, 2020. And we're about 5:20 p.m. Central Time. I decided to not do this Friday afternoon. What's the difference? We're all stuck in with the COVID, just about the whole country, so I can take an extra day for myself. Remember, we have Thanksgiving this week, so it's going to be strange trading to a degree. Since so many of us are locked in and not going to the office anyways, things change a little bit. It was the week where we got the COVID vaccine and the first application for emergency approval, and that was from the Pfizer BioNTech, and we'll see just what happens with that. It should get quick approval, but quick can be 2 to 4 weeks, so we don't know where that's in. Others will be forthcoming. Couple of things. I'm going to be having my webinar, and that webinar is going to be this coming Monday. So it's Monday at noon. It's an invite-only webinar. Now, if you're a subscriber to my other research, it is free to you as long as you sign up before a certain date. And people ask me why I do that. Well, the chat rooms that I buy from Zoom have a certain size. And via that size, it's my expense, I'm paying for that. I want people to sign up that are my paid subscribers by a certain date, and then after that I invite the general public. You should have received, as the general public, your invite this morning, Saturday morning. I'll probably send another one out on Sunday. You're invited to attend. There is a small cost for it. You will find that if you buy any of my subscriptions, it's free to you. In addition, you get your handheld mobiles, you get free for a subscription, my special reports, and of course the live webinars. These last about an hour, and I invite you to ask questions on any stock, futures, ETF, spider that you want. Bring your symbols if they're stocks, spiders, and ETFs. I'm a commodity guy, but what I think I am is a pretty good chartist. And as a chartist, you give me the symbol, I'll bring up the chart and I'll tell you what I see and we'll dissect it right there for you. That's what this whole webinar is, and reinforcing what you learn in my charting course and other techniques. All right? So it's that simple. One final thing. If you like these, do me a favor and hit the like button on the YouTube. If you don't like them, you can hit that as well. You can write me comments. You'll find I do respond. I don't respond to everyone, there's so many, but I respond to a lot of them. And I think you'll get what it is. But you can't ask me, Ira, should I buy here or sell there? Those I can't respond to. It's not that I don't want to. The government, I'm a registered broker. You can't just do that. There's got to be so many disclaimers on it that in order for me to do it, the disclaimers would be bigger than the short answer. Okay, so here we are on the monthly chart of gold. Gold is it's become a very disappointing commodity. Think of it. Your Bitcoin's back to $19,000. It started the year at about $6,000 or so. Gold market started this year right here, about $1,500. It's $1,800. There's no comparison as to what has done better. Don't write me and say, Ira, how could you say that Bitcoin, which has nothing behind it, is better? It's not what I'm saying. What I am saying to you is Bitcoin is respected in many places. You can sell it. You can convert it to cash. I think you know that. Is it run by exchanges I think are super reputable? Well, Bitcoin does trade on the Chicago Mercantile Exchange, super reputable. Do I think when you go to those other exchanges as a whole that your money is safe? I have my doubts. Why? Just read about them. If they're regulated and they put monies away that the regulators want, I can accept that. But unfortunately, a lot of them are just private companies and they don't fall into those regulations, and they're not even based, many of them, in America. All right, so when we look at the chart action, you have an outside month down so far. The month is not over. In fact, you're only down $7 for the week. It'll take nothing to be back to the 1890 level. But if you stay like this, the problem is if you get under 1843, you then turn this whole pattern to one of a lower high, lower low, putting into play, getting back here. Here's what's wrong with this chart. This was the power of the chart. This is called an embedded reading. An embedded reading occurs when the two numbers that make up a slow stochastic stay over 80 for at least 3 time frames in a row. Since it's a monthly chart, a time frame would be 3 months in a row. And the market actually had 4 if you take a look at it. Not here. Yeah, here, 5. So the market did what I wanted, kept it up, but when you lose this reading and it closes under 80, the red number, it's a sign that the market has lost that momentum, and often prices want to make a run for the 18-month moving average. On the monthly chart, because it's made up of 4 weeks, and the 4 weeks are made up of 22 business days, I don't put the credence on it that I do on a weekly chart and or a daily chart. But it tells me that the momentum has been lost, and now the question is, if you drop further, it even adds to that. So we go next to the weekly chart. And on the weekly chart, and this is a close-only chart first, I show this because in relation to the 18-week moving average of closes, here's one of the filters I use. When a market is closed under this number or trading under it, the bias is down. When the market is closed over it or trading over it, the bias is up. I say or trading over it because you have intra-week moves that are going back and forth. Sometimes you're right on the number. So that's why. When I come to a weekly bar chart with nothing on it, and this is now the bar, so we're not just a close only, the pattern is one of a higher high and a lower low. You had an outside week down. If you take out the high of that within 2 weeks, which means this week, 1 week has gone by, then I think it's a bear trap. Doesn't look like it, but the week just hasn't even opened yet. We'll see. If this occurs, where's the market in relation to the 18-week average of closes? You're under it. The bias is down. So the bias went down last week. It has stayed that way on that action. Other moving averages are way down here. They're support zones, but a more likely support zone is going to be wherever the Bollinger Bands pick in. Bollinger Bands are an algorithm designed to keep the market trading within them 95% of the time. You'll discover that if you watch them more times than not, when you hit them, the market has a way of spinning away from it. Can you stay over them? Sure you can. There's a reason they're not 100%. You want to be able to hit them. You want to see if the market's staying over it because it tells you something how to trade on your daily chart. But getting over each consecutive close over, consecutive, means to me that you're taking away one of the percentage points of the 5% of the time. So the first percentage time, when you closed over that number, I said I had a 4% chance the next week, which would have been this one of staying over the bands. Well, it did it. This one, 3% chance, which means 97% chance it won't. Well, the market slipped back, and since then it's been staying within the bands. That same idea works on the downside. I'm looking for the pros to try to cover shorts at 1846.80, and I'm looking at momentum that is now oversold. Any reading under 30 is oversold for a reason for them to take that flag up and say, yes, that's where I want to take some money off the table if it's offered. When I look at the gold-silver ratio, gold is suddenly gaining on silver. It's the first time it's done it in a while. It hasn't been there, but this week it did. All the metals let go and silver gave up that ground. On the silver chart, you can see you have a pattern of higher lows, higher highs. However, for 2 weeks running, you haven't been able to stay over the 18-week average of closes. The silver bulls, I think, will grab hold the first time you do that, as long as we first don't take out 22.65, which is $1.70 away. And even more important, you're going to find this lower Bollinger Band is going to jump over that number this week, this Sunday when we open. Why? If you take a look, the market, look at the amounts that it's jumping. It's jumping here about $1 at a time. I would assume even if I cut that in half, you're going to be in the 22.80-90 level, and that's over this number. So I am looking for this to be defended. And if it's defended the way that I think, if the pros step out of the market on the first challenge of it, the question is, can it get back up and eventually over these numbers? There's another thing I'm looking at on the chart, copper. Copper is called Dr. Copper for a reason. Now, there are certain things going on. I forgot something that is super important, and I kicked myself this past week. What happened in the spring, summer when the COVID broke out the first time? Remember the copper miners, and they got COVID, and then the mines shut down? Well, the market is anticipating that. I picked up on that because a trade I was looking at in cattle didn't work. And go, why didn't this trade work? Not all trades have to work. You do understand that. I went back. It wasn't in front of me, and I said, darn it, I get it. Traders in the meats, they're concerned that they couldn't get workers into the lines in the U.S. packing houses because of COVID. The market is anticipating that might happen again. It's also right in front of Thanksgiving, so the demand's going to slip off. You're not going to get people working on Thanksgiving Day to begin with, so you're going to get less demand out of that. The cattle on feed report was bullish on, I think it was, on Friday, but you put two and two together and you start seeing. So this market's looking at that. What is the strongest user of copper? Who? China. They're the country that's their economy is growing. They don't have the COVID cases we do. They control it differently. They're a communist country. You call up the neighborhood, the mayor, and you say, close down the whole city. I don't want anybody going out except for essential food with passes. The left block goes out on Thursday. The right block goes out on Friday. You can do it any way you want. Difference. They're able to control it. I'm not saying it's the way I'd want to live, but that's what it is. Strong chart. Platinum, strong chart. So I'm starting to see in the metals that these charts are getting stronger. Market's anticipating something. Car usage, industrial usage, yeah, I think so. The dollar, well, the dollar has no trends right now. It's got a higher high and a lower low. So, momentum pointing down. Let's assume the dollar continues down. If you hit the lower Bollinger Band, what do you think the pros are going to do? In unison, I hear you. They should be covering some shorts. That doesn't mean the dollar's not bearish longer term, but the first time you hit Bollinger Bands, you go in and you look at it, you see that if it pays off or not. That doesn't mean you can't keep a trailing stop, jam it up, keep it close, whatever you'd want to do through that. But that's how I'm looking at these markets. Want to